The ultimate guide to the best real estate investment strategies for maximum returns. Real estate investing is an excellent way to make money and build wealth. It can also be a great source of passive income if done correctly. However, it is important to understand the different real estate investment strategies that are available and how they can help you maximize returns on your investments. This guide will provide an overview of the best real estate investment strategies for maximum returns, including tips on how to choose the right investments and what factors to consider when evaluating potential opportunities. With this information, you will be able to make informed decisions about your investments and increase your chances of success. Earning money is one of the most basic human needs, and financial security is a concept that transcends national boundaries. With this in mind, our team at Forex Peace Army strives to offer high-quality investment opportunities for those looking to profit from the global economy. We understand the importance of peace of mind, which is why we work hard to ensure that there are no brokers operating with bad intentions. Our goal is for you to invest safely and successfully by maximizing your returns with trading on currency pairs that are low risk and have a high potential for profits. There are also many online tools available from brokers that can help you test various investment strategies to find the strategy that's right for you. This is a helpful barometer in determining how well your strategy will work and if it's worth investing your money. All investments carry risk, and not all investments will be profitable. By understanding the risks associated with each strategy, you are able to make more informed decisions about which one is right for you. Following are some of our most popular recommendations. As always, we wish you the best of luck in your trading endeavors. What are the different types of real estate investment strategies? Real estate investments can be a great way to build wealth and generate income. However, there are many different types of real estate investment strategies that can be used to achieve different goals. From buying and holding properties, to flipping houses, to investing in REITs or real estate crowdfunding platforms, investors have a range of options when it comes to investing in real estate. In this article, we will look at the different types of real estate investment strategies and discuss the pros and cons of each one. Real estate crowdfunding platforms. A real estate crowdfunding platform is a web-based platform that connects investors with real estate projects, whether they are new construction or renovation projects. The investor in turn receives an equity share in the project and sometimes receives income as well. They can also receive some sort of return on their investment over time, such as cash back or dividends. These platforms offer many benefits to both investors and homeowners by providing a means to lower risk while also obtaining financing for their projects. For example, if an investor has $100,000 to invest in a new home construction project but has to wait 3 years for a conventional loan, then a crowdfunding platform will provide them with the capital they need for their project much more quickly. Sites such as Fundrise and Realty Shares allow investors to purchase shares in real estate projects, with the project owner receiving 70% of the earnings and investors receiving 30%. In addition, many platforms offer flexible terms which make it easier for both sides to negotiate when necessary. While these platforms can be beneficial to investors by providing quick equity funding or faster access to capital markets, they are not ideal if you are looking for long-term income or rental property. Investing in real estate with crowdfunding sites such as Fundrise and Realty Shares provide opportunities for investors to invest in real estate projects by purchasing shares of a project. This can be done through one of 3 methods: pre-construction, investment, or affiliate program. In order to purchase shares from these sites, however, you must already have a certain amount of capital that you are willing to invest in the company. By connecting your bank account or IRA account with those platforms, your money is automatically invested and they will automatically debit out any gains or dividends that their portfolio generates. How to analyze a property and calculate its potential returns. Analyzing a property and calculating its potential returns is an important step for any real estate investor. It requires knowledge of the local market, current trends, and the ability to assess the potential risks associated with any investment. By understanding how to analyze a property and calculate its potential returns, investors can make informed decisions about their investments. This article will provide an overview of how to analyze a property and calculate its potential returns in order to maximize their profits. Step 1. Find the value of a property. To calculate the potential return on a property, it is important to first find its value. To do this, one must review comparable values in their area and assess current trends to determine what a property might be worth. Comps are essentially similar properties in one's geographic area that provide an idea of how much they could sell for. They are typically found by running a search on sites like Zillow or Trulia, or by running comparisons against other listings around the area. At times, investors might need to use appraisals as well when determining comps. As a rule of thumb, an appraisal should always be used as a reference to compare against other properties when determining comps. The following are some tips to consider when reviewing comps. Review the comparables in your area. A lot of property investors use Zillow's comparison tool to find comparable values in their area. To use this tool, they must first enter the address they are interested in and what type of property they're seeking, example, houses, condos, commercial space, and then select Find in order to view the results. If you haven't used the tool before, you can get it by going to zillow.com/comparisons. Once this is done, investors can click on the Compare tab and choose which type of property they are looking for in order to view comps in their area. If investors see something interesting, they can click on the specific property's listing to learn more about it and determine if it would make a good investment opportunity. Obtain an appraisal if you're considering a major purchase with a large amount of money at stake, like buying an office building or multiple homes in one area. You'll need to locate an appraiser and discuss the property with them. The process of obtaining an appraisal is usually free, but if you're investing in commercial real estate, be prepared to pay a fee. A smart investor will find out what type of appraisal is needed for their purchase and plan for it ahead of time. The pros and cons of different real estate investment strategies. Real estate investing is a great way to build wealth over time. However, it is important to understand the pros and cons of different investment strategies in order to maximize returns and minimize risks. From buying and flipping properties to long-term rental investments, each strategy has its own advantages and disadvantages which must be carefully considered before making any decisions. In this article, we will discuss the different real estate investment strategies, as well as their benefits and drawbacks. The first real estate investment strategy is buying properties, which includes buying and flipping homes, commercial properties, and land. Buying properties can be an effective long-term strategy for building wealth. Many people use this investment strategy as a way to provide a steady stream of cash flow as necessary repairs are made over time. In addition, the potential to increase the property's value through improvements or renovations also make this investment option attractive. Although there are benefits to buying and flipping property, there is also risk involved with this method because it requires a large upfront capital outlay that may not yield enough income if the property does not increase in value. This risk can be mitigated by diversifying the properties one buys, but this requires a lot of time and effort to do properly. The downside to buying and flipping property is that it requires constant work to maintain the property and make repairs, which may not be possible for some people with busy schedules or low incomes. There are also risks involved when buying and flipping properties because if the market is experiencing a downturn, it can leave business owners with expensive stocks of unsellable homes on their hands. The second real estate investment strategy involves investing in commercial properties such as office buildings, retail stores, restaurants, hotels, and hospitals. This type of investment strategy is usually more risky than buying property because commercial properties tend to be more volatile and can experience a lot of fluctuations in value. What are the best ways to finance your real estate investments? Real estate investments are a great way to diversify your portfolio and create long-term wealth. However, financing these investments can be tricky, and there are many different ways to do it. From traditional bank loans to private money lenders, there are several options available for real estate investors. In this article, we will explore the best ways to finance your real estate investments and how you can make the most of them. The different types of loans for property investments. Bank loans. Traditional bank loans are usually the first options for financing real estate investments. They typically offer longer terms and lower interest rates than private money loans. A bank loan is also one of the most practical ways to finance your property, because it is a reliable source of capital with minimal hassle. However, it tends to be a more expensive option than other choices out there because they typically require larger down payments and higher monthly payments. With that said, if you are looking for instant liquidity or don't have much money saved up, this may be your best option. Private money lenders. Private money lenders are typically higher risk loans that offer what is known as a hard money loan. This means you will have to put up some of your own property as collateral for the loan. If you succeed with the property, you will be able to repay the loan, and if not, you could be forced to sell off your real estate investment. Hard money loans typically offer lower interest rates than bank loans and longer terms than private personal loans or credit card cash advances. How to find the right properties for your investment goals. Investing in real estate is a great way to build wealth and create financial security. However, it can be difficult to know where to start when looking for the right properties. To make sure you are investing in the right properties for your investment goals, it is important to do your research and understand the different types of investments available. This article will explore how to find the right properties for your investment goals by considering factors such as location, size, amenities, and market trends. Location is an important factor to consider when investing in real estate. Understanding the neighborhood you are investing in will help you understand how likely it is that your property will appreciate as a result of market trends or gentrification. The three key locations in which most investments tend to occur are downtown, suburb, and rural. In addition to location, the size of a property is also an important factor when deciding on the right real estate investment opportunity for you. For example, if you have little experience with investment properties or want to purchase small properties and build up your portfolio, then a suburban area would be a good location for you to invest. A suburb location is also a good option for someone who has more experience with investment properties and wants to purchase larger properties. The same can be said if you want to invest in large properties and have already amassed a portfolio of investments that you are looking for new opportunities. Size is an important factor to consider as well because it will determine how much capital you need in order to purchase the property. If you want a small size property, then downtown would be the ideal location, while if you want a large property, then the suburbs would be your best bet. You should also consider how much return or yield on investment, ROI, you will be able to get from the property. If you want a higher ROI, then downtown would be the best option, while if you are looking for a lower ROI, then suburban properties would be ideal. Another important factor to consider is your financial status and risk tolerance. If you have a steady job and have no debt other than your mortgage payments, then investing in real estate could provide an excellent opportunity for you to earn income passively while also diversifying your portfolio of investments or risk exposure. However, if now is not the right time for investing in real estate because of current financial conditions, then you should wait for a better time when real estate would be an appropriate investment for you. 2023 is the perfect time to start investing in real estate. Real estate investing is a great way to build wealth and generate passive income. The potential for growth in the real estate industry is immense, and with the right investments, you can make huge profits in a relatively short amount of time. 2023 is the perfect time to start investing in real estate because of the increased demand for housing due to population growth, low interest rates, and tax incentives. Investing in real estate now can help you secure financial freedom in the future. Wealth building tip: invest in real estate. Successful real estate investing is all about timing, location, and knowledge. It can be tough to make a profit when purchasing properties that are overpriced or in low demand. Here are some tips for investing in real estate during the 2023 economic cycle. Establish a timeline for the property purchase and the amount of time it will take to break even. Be aware of tax incentives and government programs that may help your investment. Research competitive pricing and rent rates to ensure you are not paying more than necessary. Go with the flow. If market prices surge and your property is not moving, consider selling to cash in on the increase in value. Before the market drops, invest in commercial real estate to gain access to profits from property rentals. If you agree, please like and subscribe. Thank you for watching.